Dividend stocks are stocks that pay a portion of the company's earnings to its shareholders on a regular basis. These payments are called dividends, and they are usually made quarterly or annually. Investing in dividend stocks can be a wise decision for investors who are looking for a steady stream of income. In this article, we will explore the benefits of investing in dividend stocks. Regular income. One of the most significant benefits of investing in dividend stocks is the regular income that they provide. Unlike growth stocks, which reinvest their earnings back into the company, dividend stocks pay a portion of their earnings to shareholders. This makes dividend stocks an attractive investment for those who are looking for a steady stream of income. The amount of the dividend payment can vary from company to company, and it is usually a percentage of the company's earnings. Dividend payments are typically made on a quarterly basis, although some companies pay them annually or semi-annually. The regular income provided by dividend stocks can be used to supplement a retiree's income or to help pay for other expenses. Long-term growth. In addition to the regular income provided by dividend stocks, they can also offer long-term growth potential. Companies that pay dividends are typically established and profitable, which means that they have a history of growth and stability. As the company continues to grow, so too will the value of the stock. Over time, the value of a dividend stock can appreciate significantly, providing investors with a source of long-term growth. This is especially true for companies that have a strong track record of paying dividends and increasing them over time. Lower risk. Investing in dividend stocks can also be less risky than investing in non-dividend stocks. Dividend-paying companies are typically established and profitable, which means that they have a history of stability and financial strength. This makes them less vulnerable to market fluctuations and economic downturns. In addition, companies that pay dividends are often more mature and have a well-established business model. This means that they are less likely to experience significant changes in their business operations or financial position. As a result, dividend stocks can be a more stable and less risky investment option. Diversification. Investing in dividend stocks can also be a way to diversify your investment portfolio. Dividend-paying companies come from a variety of sectors, including healthcare, technology, consumer goods, and more. By investing in a diverse range of dividend stocks, investors can reduce their overall investment risk. Diversification can also help investors to achieve their investment goals by providing exposure to different sectors and asset classes. This can be especially important for investors who are looking to balance their portfolio between growth and income investments. Compound interest. Another benefit of investing in dividend stocks is the power of compound interest. When investors reinvest their dividend payments back into the stock, they can earn interest on the interest. Over time, this can lead to significant growth in the value of the investment. For example, let's say an investor buys 100 shares of a stock for $10 per share, and the stock pays a 3% dividend. If the investor reinvests the dividend payments back into the stock, they will receive an additional 3 shares each year. After 10 years, the investor will have 134 shares, which will be worth $1,340 at the current stock price of $10 per share. This represents a return of 34% on the initial investment. Tax benefits. Finally, investing in dividend stocks can also provide tax benefits for investors. In the United States, qualified dividends are taxed at a lower rate than ordinary income. This can be an advantage for investors who are looking to maximize their after-tax returns. In addition, some dividend stocks offer dividend reinvestment plans, DRIP. Inflation hedge. Dividend stocks can also serve as a hedge against inflation. Inflation erodes the purchasing power of money over time, which means that the same amount of money will buy less in the future than it does today. However, Dividend stocks can help to offset the effects of inflation by providing a steady stream of income that increases over time. As companies grow and increase their earnings, they often increase their dividend payments to shareholders. This means that the dividend income received by investors can increase over time, providing a hedge against inflation. Predictable returns. Investing in dividend stocks can provide investors with predictable returns. Unlike growth stocks, which may not pay dividends at all, dividend stocks pay a regular income to shareholders. This means that investors can predict the amount of income they will receive each quarter or year. Predictable returns can be especially important for investors who are relying on their investment income to meet their financial needs. By investing in dividend stocks, investors can plan their expenses more accurately and avoid any surprises. Psychological benefits. Investing in dividend stocks can also provide psychological benefits for investors. The regular income provided by dividend stocks can help to reduce the stress and anxiety associated with market fluctuations and volatility. In addition, receiving a regular stream of income can provide a sense of financial security and stability. This can be especially important for retirees or those who are nearing retirement. Flexibility. Finally, investing in dividend stocks can provide investors with flexibility. Investors can choose to reinvest their dividend payments back into the stock, use the income to supplement their retirement income, or use the income to meet other financial needs. In addition, investors can choose to sell their dividend stocks at any time, providing them with the flexibility to adjust their investment portfolio as needed. This flexibility can be especially important for investors who are looking to balance their investment portfolio between growth and income investments. Conclusion. Investing in dividend stocks can provide investors with a range of benefits, including regular income, long-term growth potential, lower risk, diversification, compound interest, tax benefits, inflation hedge, predictable returns, psychological benefits, and flexibility. By including dividend stocks in their investment portfolio, investors can achieve their investment goals while managing risk and maximizing their after-tax returns. However, it is important for investors to conduct their due diligence and carefully evaluate the financial health of the companies in which they are investing before making any investment decisions.